If you purchase an investment property, the chances are you might have done it with intention of getting some tax benefits out of it. But what are these tax benefits? How do you actually maximize your rental property claims? Well, I'm here to help you explain that. And one of the key concepts you need to understand are what are cash expenses and what are non-cash expenses. So I'm going to be covering some expenses that will cost you money, you've actually had to pay for them, and some of these great expenses where they actually don't cost you anything ongoing, but you're still getting a claim. And of course, the HO have a really helpful rental property guide that they put out each year. You can use it, search for different keywords within it, and it's really helpful. I use it all the time when I'm wanting to get up-to-date information about how claims would affect a rental property. So let's start with the cash expenses. So these are the things you've had to actually pay for. So these are going to be all of your common items that you pay for your rental property. So what I'm going to do is run through here all the different categories we might have and what could be included. So we have advertising for tenants. So this may be any kind of advertising you pay through an agent or directly yourself to get your tenants in. We then have body corporate fees. So these are going to be your strata fees or your body corporate fees. Borrowing expenses, which is a bit more of a complex one, but that is things such as maybe you've paid a mortgage broker or you've paid LMI, and a lot of these get claimed over a 5-year period. We then have cleaning. So that is any cleaning you've had to do on the property. Council rates, so the rates you've paid to the council. We'll come back to capital allowance assets. We have gardening, so obviously any gardening you've paid for, or this might be, you have a regular gardener come in. We have insurance on the property, interest paid on the loans, and this is typically going to be your biggest expense you have, so do not forget this one. We then have land tax, so if you're in a state where you're having to pay land tax, then you can claim that. Legal fees, I don't see this one used a lot, but there might be some situations where you've had to pay some legal fees for your property. We then have pest control. So again, if you're using pest control services throughout the year, we have agents fees. So do not forget about these. They should be on the agent statement that you get from your agent at the end of the year, and it will show you all the different agent fees you've paid. We then have repairs on the property. Now, this is a bit of a complex one because you need to understand what is a repair and what is a capital item. This is where that rental property guide can come in really handy because you can search on there, but this is definitely an area, especially if we're getting into larger expenses, that you should seek the advice on. We'll skip capital works for now because we'll come back to them. We have office supplies. I don't see this used very often. Travel expenses haven't been allowed for a long time, and I don't know why they're still on the labels. We have water rates, and then we have sundry. So that is anything else. Quite often here in South Australia, it's your emergency services levy. So you can see there's lots of different categories, and it's really important that you understand that you're considering each one of these. Literally just run through every label and go, did I spend any money on these things? And obviously in particular, pay close attention to the areas where you spent money last year, because if you spent money last year, there's a good chance you spend it again this year. Another way you can help hopefully maximize your return is to subscribe to my free email newsletter. I drop this newsletter every single week with various different tips and tricks that I've learned along the way that helps you maximize your return. It's free to join, the link is in the description of the video. But now let's get back into the video and talk about the non-cash expenses. So these are the exciting things, because these are the things you haven't had to spend this year, but still may be claimable. And a lot of these are around those two labels I talked about, capital works and capital allowances, or otherwise people might refer to them as depreciation. So if you own a property, you potentially can get a depreciation schedule done. And this is going to allow you to claim capital works and capital allowances. So we have capital works, which is our building and our structure, and nearly every property is eligible to claim these. The other side is capital allowances, and these are going to be the things that make up the internal parts of your home, such as ovens and air conditioners. Now, there are different rules on these, so you may not be able to claim this depending on when you purchased or if it was a new property or not. So just keep in mind that and make sure you talk to one of these companies that do it. There's lots of companies out there that do these depreciation schedules. Have a chat to them about the age of your home, when you acquired and what the value is, and they'll be able to talk to you about what the potential claims you could get. But the great thing about these claims is when you're claiming them, you're not actually spending that money at the time because you've already spent the money when you purchased the property. So you're getting a claim each single year. And this is where people do use the power of negatively gearing. So they might have a property that is cash flow positively geared, but from a tax point of view, it's negatively geared. So they're getting tax benefits for these ongoing. Now you have to be careful with some of these because the capital works, for instance, might reduce your cost base of your property, which is a whole nother topic, but just make sure you ask your tax agent how that works. And don't forget about the assets you've purchased ongoing. Especially if you switch agents or start to do your own return, make sure you're looking back to make sure you've captured any items that have still got depreciation left to claim. The other area that you might have non-cash expenses, and I briefly touched on earlier, was borrowing costs. So certain borrowing costs can't be deducted at the time, but they might be deducted over a 5-year period. So again, make sure that you're capturing these, claiming the full amount over those 5 years, especially if you're switching agents or you're going back to do your own return where it might not be automatically carrying across. So with rental properties, it's all about capturing all your expenses. So run through all of those labels like I said. This is the easiest way to maximize that return, and make sure you're comparing to what you did last year so you're not missing out on anything. And obviously capture all those receipts along the way, especially for those little repairs. You've gone to Bunnings and you've bought something, capture that receipt, whether it's digitally or in a storage box. If you're wanting to better understand other aspects of your tax, in this upcoming video, I'll go through 20 common items that people think might be claimable, and I'm going to tell you whether you can claim them, and if you can, what type of things you need to look out for. I hope to see you over there.